Welcome to Energy Insights, your trusted source for the latest updates on the global energy transition. I am Stephen. Today, we're looking at a pivotal moment for Southeast Asia, a region standing at the crossroads of two very different energy futures. On one side, there's a long-standing dependence on fossil fuels, especially natural gas. On the other, the case for renewables, not only as a climate solution, but as an increasingly smart economic choice. According to the latest analysis from BloombergNEF, the reality is clear across much of Southeast Asia. Renewables are no longer just a greener option. They are now the cheaper one. Yet, despite the falling costs of clean energy, governments across the region continue to approve new gas infrastructure projects. So why is that? And what does it tell us about the region's energy decision-making in 2025? Let's dig in and unpack what's really happening beneath the surface. Across Southeast Asia, electricity demand keeps rising. Industrial growth, larger populations, and hotter temperatures are putting serious pressure on power systems. Naturally, energy planners are focused on keeping the lights on, making sure electricity stays affordable and supply remains stable. But what's changed in recent years is the economics. Solar and wind are now cheaper than building new gas-fired power plants in the countries like Vietnam, Thailand, and the Philippines. And that's not a future prediction. It's already happening. Power purchase agreements for utility-scale solar are being signed at lower prices than the levelized cost of electricity from gas. Add energy storage into the mix, and the gap gets even smaller. In fact, in some cases, solar with batteries already beats imported LNG on both cost and stability. That's a game changer. It means the old idea that you had to choose between affordability and decarbonization no longer holds true. The cleanest energy options are now often the most financially sensible too. But still, natural gas continues to dominate national energy plans across the region. New terminals are being built, new power plants are coming online, and long-term LNG import contracts are being signed, all priced in foreign currencies and tied to global markets. At first glance, it might seem like smart, cautious planning. Gas is dispatchable, it can fill in when renewables fluctuate, and it's a familiar technology for utilities and grid operators. But there's a catch. This path carries serious economic and environmental risk. Global LNG prices remain volatile, and infrastructure costs keep rising. That means these gas investments could quickly turn from transitional tools into expensive liabilities. The BloombergNEF report warns of this risk clearly. Continuing down the gas path could leave countries with standard access, higher electricity prices, and greater exposure to foreign exchange risks, all of which could slow down broader economic growth. So why does gas still dominate the region's plans, even as renewables become cheaper and more viable? Decisions made 5 or 10 years ago are only now being implemented, and many regulatory frameworks and procurement policies simply haven't kept pace with how fast the market is changing. Then there's perception. For many policymakers, natural gas still feels like the safe option and no quantity. Renewables, especially variable sources like wind and solar, can seem unpredictable, even though modern grid management and storage technologies have largely addressed those concerns. Shifting that mindset will take more than just new data. It will take leadership, a willingness to revisit outdated assumptions, and modernize national power development plans. Governments will also need to confront the growing financial risk of locking themselves into fossil fuel infrastructure, just as global markets begin to penalize carbon-heavy access. But this isn't a story of failure, it's an opportunity. Southeast Asian countries are not starting from zero. The Philippines is already seeing major momentum behind solar investment. Vietnam's rapid solar growth in recent years has drawn global attention. There is technical know-how, investor interest, and a growing awareness of how climate change is affecting the region. What's needed now is conviction, not just from governments, but from lenders, utilities, and regional partners. A belief that a cleaner, more flexible power system isn't only possible, but practical and profitable. The time to pivot away from gas lock-ins and towards renewables, wind, solar, and battery-backed systems isn't sometime in the future. It's now. The energy choices made in 2025 right now will shape Southeast Asia's future for decades to come. Again, the BloombergNEF's finding leave little room for doubt. The cost case for fossil fuels is collapsing, while the argument for renewables keeps getting stronger, not just for the planet, but for the bottom line. Whether the region chose to embrace this shift or double down on gas will determine its resilience, economic competitiveness, and global standing in the years ahead. Southeast Asia truly stands at an energy crossroads, and while the path forward isn't without challenges, it's clearer than ever which direction leads to a stronger, cleaner future. Thank you for tuning in today's episode. If you find this episode insightful, don't forget to like, share, and subscribe to stay updated on the latest in the energy transition. For more in-depth analysis and updates, visit our website at energytracker.asia. Thanks for tuning in, and I'll see you next time on Energy Insights.